Thus, financial statements are the summarized reports of recorded facts and are prepared following the accounting concepts, conventions and requirements of law. Objectives of financial statements. Financial statements are the basic sources of information to the shareholders and other external parties for understanding the profitability and financial position of any business concern. They provide information about the results of the business concern during a specified period of time in terms of assets and liabilities, which provide the basis for taking decisions. Thus, the primary objective of financial statements is to assist the users in their decision-making. The specific objectives include the following: to provide information about economic resources and obligations of a business. They are prepared to provide adequate, reliable and periodical information about economic resources and obligations of a business firm to investors and other external parties who have limited authority, ability or resources to obtain information. To provide information about the earning capacity of the business, they are to provide useful financial information which can be gainfully utilized to predict, compare and evaluate the business firm's earning capacity. To provide information about cash flows, they are to provide information useful to investors and creditors for predicting, comparing and evaluating potential cash flows in terms of amount, timing and related uncertainties. To judge effectiveness of management, they supply information useful for judging management's ability to utilize the resources of a business effectively. Information about activities of business affecting the society. They have to report the activities of the business organization affecting the society, which can be determined or described or measured and which are important in its social environment. Disclosing accounting policies. These reports have to provide the significant policies, concept followed in the process of accounting and changes taken up in them during the year to understand these statements in a better way. Types of financial statements. The financial statements generally include two statements: balance sheet and statement of profit and loss, which are required for external reporting and also for internal needs of the management like planning, decision-making and control. Apart from these, there is also a need to know about movements of funds and changes in the financial position of the company. For this purpose, a statement of changes in financial position of the company or a cash flow statement is prepared. Balance sheet. Balance sheet of a company is prepared and presented in the form prescribed in revised Schedule 6 of the Companies Act 1956. Every company registered under the Act shall prepare its balance sheet, statement of profit and loss, and notes to account thereto in accordance with the manner prescribed in the Schedule 6 to the Companies Act 1956 to harmonize the disclosure requirement with the accounting standards and to converge with new reforms. With regard to this, the Ministry of Corporate Affairs (MCA) has prescribed a revised Schedule 6 to the Companies Act 1956 with a notification dated 28th February 2011. It is applied to the financial statements prepared for all financial periods beginning on or after April 1st, 2011 by the Indian companies. The revised Schedule 6 has introduced many disclosure requirements. It has also done away with several statutory disclosure requirements. Balance sheet as on 31st of March 2013. Particulars: note number, figure as at the end of current reporting period, figure as at the end of previous reporting period.